Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, January the 26th, and wanted to just talk briefly about what markets did last week, with it being a little bit of a down week, but not to be expected off of the hot start that we've had so far this year in the equity markets. The S&P 500 was down 0.55%, or down 55 basis points, or 66 basis points on the week. Last week, or down 0.66%. The mid-cap index, as measured by the S&P 400, was down 87 basis points, or 0.87%, and the S&P 600, which is the measure of the small caps, was down 1.33%. So a little bit of profit taking there, and a little bit more out of small and a little bit more out of mid, but those have been the ones that have outproduced the large caps so far this year. So as we have entered into this part of the earnings season, we have starting to get a lot of corporate earnings for the last quarter of 2022 and the full year-end numbers for a lot of corporate companies. And we're getting those earnings in, and over 70% of corporate earnings are beating analyst expectations, which is fantastic, because as we were heading into 2023, the overarching feeling amongst the analyst community is that we were in for not only just a recession, but also a corporate earnings recession, where you started to see earnings really contract as well as the economy contract. Well, as well, today we also got the final reading of fourth quarter GDP at 2.9%, ending the fourth quarter of 2022 positive, with the economy having a lot of momentum and being able to make it through. Now, we've had rolling slowdowns starting back in the first and second quarters of 2022. We had an inventory correction for the first half of the year of 2022, and you saw that in the goods sector. You're starting to see some slowdown in the technology sector now, with layoffs and things along those lines, and expect it to move through some other consumer-related industries. But you're going in this environment, while you have some are going to struggle here, you're going to have some winners that are going to be beneficiaries. Think about housing, for example. That you're going to see high rates, you see the home builders pulling back, but we also have an infrastructure bill that has been passed and that is going to be funded in infrastructure projects and construction projects, roads, bridges, airports that are going to be built, that is going to be positive and continue to move this economy forward. So at this time, what we have done at River Place is we've really positioned our portfolios to find companies with strong balance sheets, but have great prospects for the next couple of years. So if you are a client of ours, you would have seen some rebalancing and some new positions into your portfolio this week. So we are prepared to, what we would say, not steamroll through 2023, but muddle through here, where you're going to have times where it seems like things are going to go well, and then things are going to be slow on the other hand, and we're just going to kind of muddle through this year is our expectation. So as always, if you have questions about what's going on with your individual portfolio, or ways in which we can help you navigate these volatile times, feel free to give us a call. We're easy to talk to, and we're happy to help. You can reach us at 904-346-3460, or always check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much.